All right, let's get right into it because we've got a real economic puzzle on our hands, and it's all happening in India. See, on one hand, you've got the world's fastest growing major economy, which is amazing. But then you look at its currency and it's telling a completely different story. And that's the big question, right? Because on the surface, this just doesn't add up. I mean, you'd think a strong, booming economy would equal a strong currency. That's Econ 101. But what's happening in India is, well, it's turning that whole idea on its head. So let's unpack exactly why. I mean, you're seeing headlines flashing numbers just like this one. The rupee hitting a fresh record low against the US dollar. And look, that's not just some abstract number on a trading screen. It has real-world consequences. We're talking about real pressure on everything from the cost of goods you buy to the value of people's hard-earned savings. And just to be clear, this isn't some one-off bad day. The currency has shed about 6% of its value just this year. That actually makes it the worst performing currency in all of Asia. So what is going on here? What's happening behind the scenes? Well, let's play detective and start looking at the clues. Okay, so clue number 1. This one actually points us outside of India's borders. It turns out there are some really powerful global forces at play, and they're putting a serious squeeze on the rupee. And what you see here, it's like a perfect storm of trade pressure. First, you've got high US tariffs, which, makes Indian exports more expensive and a lot less competitive. Then, get this. India is the only major economy that doesn't have a bilateral trade deal with the US. When you put all that together, you get this prolonged uncertainty. And if there's one thing investors hate, it's uncertainty. It makes them really, really wary. And that uncertainty? Well, that leads us directly to our second clue. As they say in all the movies, we've got to follow the money. And right now, the trail shows a lot of it is flowing out of India. Check this out. Foreign investors have pulled a staggering $1.6 billion out of Indian stocks, and that's just in December so far. So think about what that means. When that much money leaves the country that fast, it means investors are selling off huge amounts of rupees to buy dollars. That creates a ton of selling pressure, and boom, the rupee's value goes down. So here's the key takeaway from that. In a shaky global climate, investors do what they always do. They look for safety. They run towards what they see as a safer bet. And right now, that's US dollar assets. But the big question is, why are they pulling out of India specifically? And this chart, this really gets to the heart of it. Some people are calling it investor apathy. It's not that India is doing badly per se. I mean, an 8% gain is respectable. But when you can put your money in the US or China or Japan and get returns that are double or even triple that, well, for a global investor who's chasing the best possible profit, the choice becomes pretty simple, doesn't it? All right, on to clue number 3. This one involves the inside player in this whole story. India's central bank, the Reserve Bank of India, or the RBI. Now, these are the folks with the power to step in and change things. So the question is, what are they actually doing? So the RBI has a big tool in its toolbox called Forex intervention. Basically, to defend the rupee, they can take their huge stash of US dollars and use them to buy up rupees on the open market. That increases demand and helps prop up the price. It's a pretty standard move. But the way the RBI has been doing it lately is very, very calculated. It's strategic. See, instead of just jumping into the spot market for immediate sales, which is kind of like a brute force tactic, they've been a lot more active in the forwards market. Now that's where you agree to buy or sell currency at a future date. It's a much more subtle move, but it's also really powerful. It sends a strong signal to the market that the bank is committed to stability in the long run, and it does it without having to burn through all their cash reserves at once. And speaking of reserves, whoa, the RBI is sitting on a massive war chest. We're talking nearly $700 billion. That is a huge safety net. It gives them all the firepower they need to jump in when they have to, and it also makes sure India can easily pay for all its imports. That provides a really crucial layer of stability to the whole system. Okay, so let's recap the clues. We have global trade pressures, we have capital flying out of the country, and we have a central bank making very strategic moves. So now that we have all the pieces, let's put this puzzle together and figure out the verdict. Who actually wins and who loses when the rupee falls? Because this is really a double-edged sword, There are clear winners and clear losers. On the winning side, you've got exporters, especially in big sectors like IT and pharma. All of a sudden, their products are cheaper for the rest of the world to buy. It's also great for Indians working abroad, maybe in the UAE or the US. Every dollar they send home is suddenly worth more rupees. But There's always a but, isn't there? The losers are the importers. They have to pay more for everything they bring into the country. And that pressure, eventually, that can trickle down and mean higher prices for everyday people at the store. That's the risk of inflation. So let's put a bow on this. The big takeaway here is that the rupee slide isn't because of any one thing. It's not that simple. It's a really complex dance between a few big factors. You've got those global trade headwinds pushing against it. You've got nervous investors pulling their money out to chase bigger profits somewhere else. And then you have the central bank, which is playing chess, not checkers, making strategic moves for the long haul instead of just reacting to every little dip. And all of this leaves us with one final, absolutely crucial question. In the end, what's going to win out? Is it going to be India's powerful economic fundamentals? We're talking high growth, a massive market, stable inflation? Or will it be the short-term jitters of global investors? That right there is the billion-dollar, or maybe I should say the trillion rupee question. And it's for sure the big story we all need to keep watching.